Volatility, that's the name right now, as the 10-year treasury bounces from the 390s to the 440s. Today we're at 4.34. So I don't really know what rates are going to do. Right now for April, I believe they'll hold. You may see some minor increases from some carriers, but today we're going to jump into a unique one. Hello agents. Hello everyone. We have a pick an option deferred annuity. Have 4 different rates based on the options you pick. I'm going to jump right into it. This one's pretty cool. It used to be these type of products existed more where you can dial it in, but I like this one because it's not, you don't reduce the rate for features, you increase the rate by reducing features. So it's kind of an opposite. So this is the fixed annuity. It's a pick an option deferred annuity. It has 4 interest rate options. You remove features to increase the rate. There's 2 MYGA options and there's 2, single premium deferred annuity options, bailout rates that can adjust annually. All these include a full death benefit, are RMD friendly, and are walkaway, fully liquid after the term. No 30-day windows, no guesswork. If you don't have really responsive clients, you don't want them in something that's going to renew surrender charges in 30 days, right? So anyway, let's jump into this page. So here, we got to make this a little bigger for us here. There we go. So we have on this one, 4 option deferred annuity. This is pick an option. So first one's a MYGA. The rate is guaranteed for the term and includes the full 10% withdrawal and all the other good features we described, as well as the interest. And that rate is here. This is this column. Sorry, let's use the right. This is this column here. So the 3-year would be 540, 560, 565, 570 for the 10. So that gives you basically the fully loaded product, 10% withdrawal, and the high, these good rates. Now, if you want to strip that 10% out and just have interest withdrawals, you pick up 5 basis points. So 545, 65. The 7 years at 570. I kind of like that. It's a sweet spot. 565 for 5, 545. All these are really good rates and they're guaranteed. The rate won't change and you can have access to your interest withdrawals. Now, let's say you want to increase the rate, or you're not so worried about the MYGA, or you trust the company's not going to drop the rate, or you think rates are going to go up so the rate wouldn't go down, whatever those options, you can remove the MYGA and go to an annually resetting rate. So the first year is 5.7. It's not available on the 3-year. The first year would be 5.7. On the 5-year, 575 and 580 on the 10-year. That allows 10% free withdrawals. But let's say in year 3, they drop this 575-year rate right here to 565. The client can leave with no surrender charges or anything. So that's the trick. But where are you going to go? See, I always say, hey, if they dropped interest rates, maybe interest rates all over the place are lower and you can't do any better. But at least you have liquidity at that point. And if you have the same bailout rate and you drop the 10%, pick up another 5 basis points. So in theory, you can get a 5-year at 575 if they don't change the rate. If they do, you can bail out. Now, can this rate go up? Yeah, I guess it's annually resetting. It could go up. I highly doubt the insurance company would raise the rate, but you never know. But I highly doubt it. So these are the trust me rates where you can bail out, and these are the MYGA rates. My sweet spot right now is going to be in this column. If you don't need big withdrawals and you want interest only, a little access, this is a great column. 545 for 3, 565, 570, and 575. I like that column. And the bailout works is if the rate reduces below the initial rate, these rates here will be, you will be able to fully withdraw your annuity balance with no charges or MVA market value adjustments. So pretty good. This is just some of the features, right? It has no repeating surrender charge. These rates are actually from a long time ago, but they're still effective as of today's the 25th. So as of today, 3/25, they're still valid. This one's really not available in these states, guys. So California, my state, not available, of course, and Hawaii in these states, but it's available in Texas, Illinois, Florida, all those good states, Michigan, 2,000 minimum. That's the really cool part. You can get these higher MYGA rates with a 2,000. Most are 100 grand to 250 to get these type of higher rates. So that what I really like about it. It's B++ rated by AM Best and RMD friendly. So same ratings as an Equitrust or whatever. Hold on, I'm not done with this page yet. Surrender charges, as you see, 9870, 9876500 thereafter on all of these. So the default option is just the 1-year renewable term. Here's your commissions agents. There's no other fees, charges, or anything else. These are the commissions. It's all built into the pricing. As you can see, that 7-year at 250 to age 80 is pretty sweet spot. 5-year at 225, very regular. And about a 1% reduction, a little more maybe on the higher terms for 81 to 90. And that's because you got a full death benefit, right? So you want to make sure, based on ages, the insurance companies want to protect themselves a little bit, right? So here's kind of a breakdown on the 4 options. I did 100,000, as you can see, with the option number 1. 100,000 will grow to, earn 17% on the 3, 31% on the 5, 46% on the 7, and 74% on the 10. If you take the interest only option, you earn a little more. It's 17.25, still 31.6, 47.4, and 74.9 here. Those are all guaranteed, assuming no withdrawals. These won't change. Number 3 and number 4 down here could change. Whoops. Hey, what's going on? These could change because they're not annually resetting, but assume they don't, these would be the values after the term. So assuming they don't change. So these are sample illustrations based on assuming no changes in the bailout rate and no withdrawals are taken. These are just a couple ads I threw together. So this is based on number 2, the interest only. This is a 7-year, 5.7. The little walkaway guy, interest only withdrawals, nothing really there. That's the 6-year with the option number 1, which is the full 10% and everything. That would be a 560 rate. And the 3-year, 545. This is a cool one if you think rates are going to be higher or even in 3 years, or you only need 3-year lockup. 545 is a really great deal for 3 years, and you're in and out of it and liquid in 3. So really like that. Anyway, yeah, actually YouTube, LinkedIn for the most updated. This is just my ending page. So agents, if you are interested in this type of MYGA, this is what we do. I work with life agents. A lot of times they're life only agents. They just do a lot of life insurance. You guys do a lot of P&C, and this is just an aside, or you're full-on annuity agents. Give us a call. I'd love to do some business and bring some new agents to this company. So please call me, 800-373. We'll get you hooked up. We'll do all the back office, get you trained, make things as easy as possible, keep your client record so you don't have to be your own back office. We'll do all that for you. Anyway, X, YouTube, LinkedIn over there for the most up-to-date information. Hey, thanks for watching, everyone. Hope you're all having a great week. Take care. Bye-bye.